Imagine a world where the money in your wallet, the backbone of global empires, suddenly loses its iron grip, plunging economies into chaos and reshaping power on a planetary scale. What if the very currency that built modern America, the US dollar, is being systematically dismantled by invisible architects, not through war or catastrophe, but through calculated shifts in trade, technology, and alliances? This isn't a distant nightmare. It's unfolding right now, as the greenback's once unquestioned dominance erodes under pressures that have been building for years. Picture families watching their life savings shrink, businesses scrambling amid skyrocketing costs, and nations rising to challenge the throne. The dollar's fall isn't just economic, it's a seismic shift that could redefine your future, your security, and the world order itself. In the coming moments, we'll dive deep into this deception, exposing the hidden forces at work, the staggering numbers behind the decline, and why ignoring it could be the costliest mistake of your life. Stay with me, because understanding this could be the key to safeguarding what's yours in the turbulent times ahead. To grasp the magnitude of this unraveling, we must first trace the dollar's ascent to power, a tale rooted in the aftermath of global conflict and strategic brilliance. In the summer of 1944, as World War II raged toward its end, representatives from 44 nations convened in Bretton Woods, New Hampshire, to forge a new financial order from the ruins. The United States, with its industrial might intact and vast gold reserves, proposed anchoring the world's currencies to the dollar, which in turn would be convertible to gold at a fixed rate of $35 per ounce. This system propelled the dollar to the forefront, fueling post-war reconstruction through initiatives like the Marshall Plan and establishing it as the medium for international aid and trade. Yet by the late 1960s, strains emerged. Rampant inflation, dwindling gold stocks, and mounting pressures led President Nixon to suspend gold convertibility in 1971, effectively floating the dollar. Far from collapse, this pivot birthed the Petrodollar era, a covert pact with Saudi Arabia, ensuring oil, the lifeblood of industry, would be priced and transacted solely in dollars in exchange for US military safeguards. Nations worldwide amassed dollars to secure energy supplies, funneling them back into US treasuries and enabling America to borrow endlessly to finance growth, conflicts, and prosperity. For generations, this loop sustained the dollar's supremacy, commanding over 60% of global reserves at its zenith. But foundations built on such arrangements are fragile, susceptible to geopolitical winds and internal excesses, setting the stage for the hidden erosion we witness today. The arithmetic underpinning the dollar's vulnerability is stark and unforgiving, revealing a fiscal abyss that grows deeper with each passing year. The US national debt now exceeds $38 trillion, a colossal sum that equates to more than $100,000 per citizen, and continues to swell through persistent deficits. Survey 3. Annual budget shortfalls routinely surpass $1 trillion, driven by expansive government spending, entitlement obligations, and economic stimuli that outpace revenue growth. Interest payments alone on this debt have ballooned to nearly $1 trillion per year, eclipsing expenditures on defense, education, and infrastructure combined, and siphoning resources that could otherwise fuel innovation or relief. F39 F5. This isn't mere accounting. It's a compounding crisis where borrowing begets more borrowing, eroding confidence both at home and abroad. Meanwhile, the dollar's portion of global central bank reserves has steadied around 58%, a decline from its historical peaks as diversification accelerates into alternatives like the euro, yen, and gold. 221744. This slippage stems from America's use of the dollar as a geopolitical tool, imposing sanctions that freeze assets and exclude foes from international payments, prompting a worldwide quest for independence. The cumulative impact is profound. A once inexhaustible reservoir of global demand for dollars is depleting, exposing the greenback to volatility and devaluation that threatens everyday livelihoods, from rising import costs to diminished retirement funds. At the heart of this engineered downfall lies the BRICS alliance: Brazil, Russia, India, China, and South Africa, a coalition representing vast populations and economic might, quietly forging paths away from dollar reliance. Emerging from the 2008 financial meltdown that exposed Western vulnerabilities, BRICS has matured into a powerhouse advocating de-dollarization, the deliberate reduction of dollar usage in trade and finance, or TBI Kufor 2016. Russia and China exemplify this shift, now settling over 99% of their bilateral transactions in rubles and yuan, sidestepping the dollar and insulating against sanctions. D984B5. India has pursued similar deals, trading commodities in rupees with partners like the United Arab Emirates. Even Saudi Arabia, the petrodollar's cornerstone, has explored yuan-based oil sales to China, its top buyer, signaling cracks in the foundational agreement. C934. BRICS isn't merely bilateral. They've advanced alternative infrastructures, including China's cross-border interbank payment system and Russia's financial messaging network, processing volumes beyond US influence. Recent initiatives include blockchain-powered payment platforms to streamline non-dollar trades, fostering a multipolar financial landscape ED 1635. This movement transfers economic leverage eastward. As these nations accumulate gold reserves and promote local currencies, diminishing the dollar's allure and creating a parallel system resilient to American pressures. The deception is in the subtlety. While mainstream narratives downplay these efforts, they cumulatively undermine the greenback's indispensability, accelerating its retreat from global dominance. Exacerbating this are US policies that, while aimed at bolstering domestic strength, inadvertently hasten the dollar's weakening through isolationist tendencies and overreach. Aggressive sanctions and trade restrictions have alienated allies, encouraging them to seek alternatives and reduce holdings in dollar-denominated assets. European and Asian partners, wary of economic weaponization, have diversified reserves, while retaliatory measures amplify global fragmentation. This self-inflicted isolation cedes influence to rivals, who capitalize by offering infrastructure investments and non-dollar pacts to developing nations. The human cost resonates deeply. American households grapple with persistent inflation, eroded purchasing power, and job insecurities tied to disrupted supply chains, fostering widespread anxiety and division. Policies intended to protect inadvertently expose vulnerabilities as the dollar's weaponization boomerangs, eroding the trust that once made it the world's safe haven. Further fueling the decline is the surge of digital innovations and cryptocurrencies, which erode the dollar's monopoly by offering borderless, efficient alternatives. Bitcoin has soared beyond $90,000, attracting institutional and national adoption as a hedge against fiat instability, with countries like El Salvador embracing it as legal tender. or 6E, FE0, central bank digital currencies add momentum. China's digital yuan facilitates sanction-resistant transactions, drawing partners into its ecosystem. C56C3, blockchain's transparency and speed outpace traditional systems, siphoning trade, volumes and challenging the dollar's role in commodities and finance. As renewables supplant oil, the petrodollar's relevance wanes, with non-dollar trades reaching unprecedented levels. This technological tide creates a vicious cycle. Diminishing dollar utility spurs further abandonment, amplifying the greenback's vulnerabilities. Envision the vacuum phenomenon, where the dollar's supportive buffers vanish, triggering a precipitous drop in value. Foreign holdings of US debt have contracted to about 32%, with key players like China and Japan paring back, heightening risks of a sell-off during crises. A64. Without this recycling mechanism, borrowing costs could spike, forcing inflationary printing or austerity. Absent historical anchors, the decline lacks natural brakes, potentially cascading into broader turmoil. Emotions run high as individuals confront shrinking wealth, uncertain futures, and a reordered global hierarchy, culminating in a multipolar, era where competing currencies fragment the once unified system. Yet amid this upheaval emerges a profound opportunity, a redistribution of wealth from the unaware to the foresighted. Eastern powers have preemptively diversified, amassing alternatives while the West clings to outdated paradigms. For those who act now, hedging with gold, cryptocurrencies, or international assets, the transition offers resilience. The dollar's deception concludes. Its erosion stems not from inevitability, but from overlooked shifts and hubris. If your portfolio remains dollar-centric, reassess, embrace tangibles and diversity before the vacuum intensifies. This transformation is underway. Position yourself wisely. Subscribe for deeper dives into navigating this new financial frontier. Thank you for staying with me till the end. Here on The Scope, we dig past the headlines and uncover the hidden layers history tried to bury. If this documentary made you think differently, hit subscribe. Your support tells me to keep creating deeper investigations. Share this video with someone who loves powerful, untold stories, and leave your thoughts in the comments. I read everyone. A new, even stronger documentary is already on the way. So stay curious, and I'll see you again soon, right here on The Scope.